Hello everyone, welcome to another live stream. Today I'm going to talk about building wealth in real estate. For those of you that are tuned in, let me know down in the comments if you can hear me right there, because let's see. Yep, it looks like we're live. So there's 4 of you guys. Hit the like button if you can hear me, guys. But yeah, today we're going to talk about building wealth in real estate. And we're going to try to define a little bit, first of all, what wealth is. In addition to that, we're going to go ahead and we're going to talk about the different ways that you can get rich, obviously, or just build wealth, which is, either investing in stocks, Bitcoin, gold, real estate. Just try to compare them a little bit. I see there's a like. Great. Thank you so much for liking the video. Let's try to get to a little bit of likes, guys, so at least YouTube sends this video out to a few people. So, Jess Cliff, what's up, Jess? Jack, I'm here for the show. Thank you for being here, Jess. Can't wait to get you that home in Sandalwood or Terra Luna, wherever it is. But yeah, we're gonna talk about building wealth in real estate, guys. So so we're gonna compare a little bit the different kinds of investing, and I wanted to know a little bit your input on this and what you think, what your best way is to get pretty much get wealthy over time. And then I don't know, I'm just gonna go off of different case scenarios. So depending on what your income is, what your credit score is, and all these things, where we need to be in order to start investing and start getting to the next level. And then, we're going to talk a little bit about BRRRR strategy. If you haven't heard of it before, it's BRRRR, 4 R's, right? Which is buy, rehab, rent, refinance, and repeat. And then I'm just going to answer some questions from you guys. So feel free to start leaving some questions down there. That would be much appreciated. That way I have something to talk about when I run out of topics. But it looks like we're going to get started a little bit. Let me take a little bit of a shot here. As usual, my Southern Comfort. And let's get started. So, building wealth in real estate. So, what I'm going to talk about today is not a get rich quick scheme, okay? This is not something that you're going to get rich next year or 2 years from now. This is pretty much just investing over time and just forgetting about the asset that you just purchased and just making money over time. Because at the end of the day, wealth is different from getting rich. Getting rich, there are rich people out there that are not wealthy. For example, let's say there is a football player. They make lots of money, but if they don't invest into things that actually create wealth, such as real estate or stocks or whatever it is that they're going to invest, they could lose all that money and go broke. Whereas wealthy people, the chance that they're going to go broke is very, very unlikely compared to the people that don't have the wealth. So wealth is where you own assets that produce income, and possibly, a passive income as well, is what I'm referring to. Because, real estate, for example, it produces income every month, which means you get a rent from renting out the place, which creates an income, and for the owner, obviously. And you don't get that from other assets that you purchase, such as purchasing, let's say, gold or Bitcoin or other things. You're pretty much just speculating when you're purchasing other assets like gold and Bitcoin. You're speculating on the appreciation. Now, of course, they do hold their value over time because they stay, they increase in value with inflation, which is great. But they don't produce any income. And that's what I believe, who was it? Warren Buffett. He was the one that said, hey, I don't like gold and I don't like Bitcoin because they don't produce anything. And that's the big issue with investing in assets, okay, like those. Now, stocks, on the other hand, for example, you can invest in dividend stocks or growth stocks and all those things, and you can create wealth with that. Obviously it will take a little bit of time, but just like real estate, but you can do that. However, in my opinion, my favorite way is to invest in real estate, because I just like the fact that no matter what, I can lock in a very low mortgage, right? A mortgage interest rate. and I can keep it for 30 years and I don't have to worry about anything. I just have to worry about getting a good renter in there, and it's gonna pay me every month. Okay, every month I'm gonna make an income. It's gonna pay off my mortgage. I am gonna make cash flow on top of that, because obviously the rent price needs to offset the mortgage and all your expenses, that go with real estate. And as long as I keep getting those that money in, I'm happy. And over time, eventually over 30 years, I know that I'm gonna have that asset 100% paid off. And regardless of what it's going to be in the future, the price of the house or the appreciation, I know that I'm going to have that asset and it's going to create income. And I know that real estate is a great hedge against inflation. So obviously, that's another reason why I want to invest into real estate. But how do we get there? How do we start? How do we get started? So depends on where you are in life, and what kind of income you have, what kind of credit score, and all these things. First thing you're going to need is a good credit score. Real estate is really good when it comes to investing in real estate, because there's just a lot of a lot of leverage that you can pull out by investing in real estate. If it's your first home, you can invest only 3% of the price of the house, and that's going to give you a good return, okay? Because if you're buying, for example, a $300,000-$400,000 home, all you need is $10,000-$12,000 out of pocket, and you can purchase a home that is 30 times the amount of money that you put in initially. So you're leveraging up a lot of your money by investing into real estate, and it's a relatively risk-free, not risk-free, but a very, very low risk asset that you're purchasing. So so that's pretty much what it comes down to, just trying to get started. But it also depends on where you're at in life. First of all, you got to get a good credit. It doesn't matter what you do. If you have a bad credit, no bank is going to start lending you money. So you got to try to get that credit above 700. Although you only need 620, you got to start getting over the 700 mark. And I'm going to share the screen with you guys so I can show you what kind of interest rate you need. For example, if you have a 740 or higher credit score, then you have an excellent credit. It doesn't matter how much higher it is. I don't care. When clients tell me, hey, I have an 850 credit score, I don't care. As long as you have 740, you're gonna get the best interest rate that there is out there. So it doesn't matter what you have on top of that. As far as anywhere between 700 and 739, that is a good credit. You can buy a really good home. You're probably going to get a slightly lower interest rate than this one, but it's still a good credit score. In fact, at 740, you're probably going to get let's say right now with the current market, you're probably going to get 3.25% interest rate. With the 700, you're going to get a 3.5% interest rate. Now, if you go down a little bit more, you're going to start looking at, 3.75, 4% interest rates. And if you have the lowest credit score that you can get a home with is probably 620 or so, you're looking at least 4.5% interest rate on your loan. So that's something to consider when you're purchasing a home. Before you start investing into real estate, whether it is for your primary home or for a home that you're going to invest in and just rent it out, you have to be at least, I would say, at 700. And if you haven't done so already, you have to start getting that credit back up. Okay, whatever you got to do, I don't know what it is, but you got to start getting that credit up. And if you have collections, call up the collection companies. You have to be really tough with them, because they do this every day and they really are scumbags. Okay, so you got to watch out with them. And if you have some debt that you haven't paid before, just got to work hard and pay it off, or negotiate the debt down, especially if it's a collection company. So for example, if you owe $10,000 for a past credit card that you haven't paid off, just go and get it settled for $1,000, $2,000, pay it off, get it off your credit. And that's when you can go ahead and get your credit up a little bit more. With collections, your credit is never going to go up, so you got to start thinking about it that way. And let's say, for example, you do have this credit card that you haven't paid off, and it's like $10,000 and it's hurting your credit. Here's what I would do: call the collection company and say, look, I am willing to settle this collection, but all I have is $1,000 cash. You can either take it or leave it. Once they agree to the $1,000, because eventually they will, or maybe they'll offer, okay, we'll do $2,000 or $3,000. That's a great return for them. So yeah, that's what you want to do, right? And you want to try to get that settlement in. However, once you settle for that payment that you want to get, which is, let's say, $2,000, you have to get it in writing that they have to remove everything from your credit reports. That's very important. That's the trick, because they don't care about you. They're going to go ahead and they're going to take your money, and then they're going to keep that inquiry on your credit report, and your credit is not going to go up. So you have to go and you have to get it in writing. There has to be a letter. It has to say that you paid off and you settled the amount, that your credit will be cleared. They will not put any inquiries on your credit anymore. In addition to that, you have to tell them that, hey, you will remove everything. You will not put anything in the future on my credit, and you will not sell my debt to anybody else. Make sure that all of these are on paper and you get their signature first before you go ahead and send them the money. And when you send them the money, just try to do something where you just don't give them your bank information, because they might take the money away. That's how you get rid of these things from your credit, and you get your credit up so that you can start purchasing real estate. Okay. Once you got your credit up to 700, pay off your credit cards, pay off all high interest debt, which is, let's say you have a car loan that is a 7% interest rate, for example. Anything above 5%, you got to get rid of it right away. So you pay off that car loan, pay off your credit cards, because all of these are going to hurt your debt to income ratio when you're purchasing a home, which is very important when it comes to lenders, because lenders, they want to see that you don't have many expenses every month, and then your income, whatever it is going to be worth, is going to be to allow you to qualify for way more real estate, which is very important. So yes, get rid of that, get rid of all the debt. And next, we got to look at what kind of income you're making. Let's say you're making $50,000 or less. And thank you so much for the comments, guys. I see that you guys are starting to comment out there and asking questions. I appreciate it. We're going to get to those and answer them all in a second, okay? But yeah, let's say you're going to get into, let's say you have $50,000 or less of income. To tell you the truth, that is probably not enough to start investing, because when you're making only $50,000, which I'm not trying to say that it's a bad income, okay, it's the average income probably. I don't know what the average income is. Let me know down in the comment for the United States what the average income is. But let's say you're making $50,000 or less, you have to worry about your expenses. You cannot put that money into investing in real estate. So in order for you to start investing, you have to figure out a way to make more money, whether it's going to be to change careers, go and open up a business, a side hustle, or something to make more money. Because at the end of the day, it doesn't matter how much money you save, how much debt you pay off. If you don't have that income that is going to support your investment strategy, you will never be able to go ahead and make and invest more money. So if you're making that $50,000 or more, figure out a way to make more money, because at the end of the day, that's the only way to get ahead. And however, if you're making $50,000, that's enough to qualify you for a home, at least to live in. If you're renting right now, that's the best way to start, is actually to get a home that you can live in. Take advantage of the super low interest rates that we have right now. Regardless of what the market is doing, how crazy it is, we know that the market is crazy. But with a $50,000 loan, let's say you don't have any debt on you, no car payments, no credit cards, nothing. That's a good income to qualify for a good home. You can probably get up to $400,000 right now, maybe not 400,000, but I would say probably like 350 or so is what you can qualify for. So that's a good resale home that you can purchase to start off. Maybe you get a fixer-upper, fix it up, and get some built-in equity, right? Use the BRRRR strategy, which is you buy a fixer-upper, you rehab it. So you go in, you fix it up, you put in new carpet, new paint, new countertops, paint the cabinets, put the lipstick on the pig, right? then you rent it out. You get some kind of income coming in from that rental. And then with the rental coming in and the house being worth what it's worth, you're going to call an appraiser in, and you're going to refinance the house, or cash out refinance, which means you can take up to 80% of equity, of equity from the loan. That way you can take that money and invest it into the next property. So, and then after you do that, then you go ahead and you repeat it. So you have the money that you took out and you repeat it and you put it into the next property. Okay. And then, yeah, that's pretty much it. That's how you start with the $50,000, income. However, you got to consider, like, for example, I have a client, he probably makes less than 50 a year. I'm guessing. He has a car detailing business where he goes, house to house, and he cleans cars. And he doesn't make much money, but what he did is he actually went ahead and purchased his first home. And it was back in the day, one of my first clients. And he purchased his first home, he rehabbed it, he got a fixer-upper, a good deal on it. And then with appreciation and everything, he was able to pull out some equity. He bought the second home. Then he did the same thing. He fixed it up. He got the equity out of it, and he pulled out equity. And he bought the third home. Then comes now, he has four homes in a matter of 4 years. And he was able to create a good income and coming from the property, because obviously he bought it when the market was lower, and he made some appreciation on those homes. So he made some money on it. And now he has a way better, chance right now to buy another house, because he already demonstrated to the banks that he knows how to do it. So he got started. He persisted at doing it, and every year he will buy one property as an owner occupied. When you buy a home as an owner occupied loan, what happens is you get the lowest interest rate available, which is right now 3%, and you're gonna cash flow that mortgage if you do have a 3% interest rate. So with that said, that's how you get started. Now, obviously, if you're making more money, that's different, because let's say you're making $100,000, or your household income is $100,000, and you don't have any debt, you have a good credit. Then you can start putting some money aside. You can start doing some investment properties. You can start buying multiple homes and get to a point where eventually you're going to retire soon, let's say in 20, 30 years from now, with all the income of the properties. If you're making even more, let's say $100,000 to $300,000, now that's when you can start investing in, let's say, 10 homes. You can buy 10 homes at a time from an investor, or you can start buying apartment complexes. So put money on the side, maybe partner up with somebody else, or with a fund, or somebody that has a lot of money on the side to buy apartment complexes, because that's what you want to do eventually in the future, to try to get ahead and try to make that passive income in the future. And yeah, using always the same strategy, which is the BRRRR strategy. Buy, rehab, rent, refinance, and repeat again. Anyway, that was pretty much it. I tried to sum it up. How many minutes was that? 18 minutes. Okay, I talked too much. Let's try to see what you guys have to say. I just wanted to throw it in there, and I'm going to go maybe over a little bit of a market update and see what's happening in the market as well. Let's see. Jess says, hi, I'm here for the show. Thanks, Jess. Jess said, we simply attempt to be fearful when others are greedy, and to be greedy when others are fearful. Warren Buffett, obviously. The GOAT, Warren Buffett, he's awesome. Very good advice. I've been watching videos about Warren Buffett and his advice, hey, just invest, in stocks or whatever it is, income producing assets, just like Warren Buffett says. And in the long term, who cares what happens? You're going to be good to go. Gold has two significant shortcomings, being neither of much use nor procreative. Yep, that's what Warren Buffett says. So you can't not make money from gold every month. It doesn't give you, I'm sorry if you guys are, you invest in gold and everything, but what kind of income do you get from gold? There's nothing. real estate does give you that income. Stocks do give you that income. So invest on those, invest in the long term, and then go for it. However, I think you should not invest into stocks if you don't have real estate already. Real estate should be the first step, in my opinion, because you can create more wealth faster with real estate by investing in under market value homes and try to get a good deal on a house, and then you're going to have instant equity in the house, and it's going to give you the chance to buy more house, and you can leverage more your money since you don't have much money. So to get started, real estate is the best way, but then eventually there comes a point where you cannot do this fast enough where it makes sense to just put your money and your savings into stocks. Okay, so I would do both, but first, until you have like 5 or 6 properties, I would not bother investing in stocks. Although a small amount is good just to get used to it and learn. Okay, thanks, Jess, for those comments. I appreciate it. That's exactly what I was talking about Warren Buffett. Just for Fun says, "Hi, you look like one of the Jonas Brothers." Just watching. Okay, I'm gonna take a shot after that. I think somebody told me before I look like Robin Thicke. I used to have way longer hair here, and one Halloween, I think it was like 4 or 5 years ago, I dressed up like Robin Thicke. Everybody was laughing like crazy. Yeah, hit the like button, guys. Thank you. All right, Richard Eusebio says, are there any new construction developments or upcoming master plan communities coming in Vegas in 22-23? That is about a year away, Richard. Is that when you're trying to move here? Let me know. Let me know down in the comments. So there's so many coming out right now. Although they're trying to finish up the communities that they have, there are quite a few this year. I just try to go and stay at least 6 months ahead. I don't know anything ahead of 6 months going into 2022. The reason why is because not even the builders know, or maybe they're trying to develop some land and trying to get it ready to build in the future. So I don't know if there's anything in 2022. I do know a few communities are coming out right now in 2021. I know Pulte is coming out with 2 or 3 communities. KB is coming out with 2 or 3 communities. Century is coming out with some communities, one in the southwest and one in the northwest. Plenty of builders out there that are starting to develop a lot of land. D.R. Horton is starting something in the southwest as well. There's a lot of communities coming up soon. I'm excited to tour them for you guys, but I can't see ahead at 2022 because we don't even know what the plan is for those. I'm not that far ahead. Just for Fun says, can I buy a house in Henderson if I'm working in California? Woo, good question. So, yes, you can buy a house in Henderson if you're working in California. However, this brings up a really good point, which is a lot of people think that they can just move here and purchase a home in Las Vegas with their income from out of state. You can't do that. Okay, you can buy a home from out of state with your income that you're making over there. However, it has to be either an investment property or a second home. In order to qualify for the house, you need to show that you make enough money to offset your expenses. Your expenses include your mortgages, whether it is a home that you're living in or the home that you're renting, plus any other expenses that you have as far as, let's say, your car or your credit cards or whatever it is. Plus, in addition to that, you have to consider also your second home now, because the Vegas home that you're buying is going to be your second home. So if you have a mortgage of $2,000 on the second home, you have to make enough money to offset all of that, okay, including your primary residence that you're living in. So that's something to consider, okay? And yeah, so if you want to, you can purchase a home. Feel free to reach out to me. Just for Fun is your name. That way you can purchase a home over here in Henderson, and we can get you all set up with a lender to qualify for that. But if you're somebody that is trying to move to Las Vegas, I get a lot of clients, and it just gets me like, okay, do your research first. They call me saying, hey Jack, I'm in town, I'm checking out some homes, I want to buy them. It doesn't work like that. You have to reach out to me in advance. We have to get you pre-qualified first. I'm a busy guy. I can't go just take off and go and show you some homes just because you said so, because you said you're in town. And then usually those are the people that don't know what they're doing, and they come in here and they say, yeah, I'm purchasing a home over here. And they don't even have a job lined up in Las Vegas to show that they can make the money here. So they go back home and they try to scramble and try to figure out how to buy the house. It's just a mess. So if you plan on buying a home here in Las Vegas, reach out to me first. Let's get you situated where we can try to figure out a way for you to buy it from over there, unless we have to get you a job over here in Las Vegas first, or at least an attempt to hire you from a company, because that's all you need. You just need a letter with a company saying that they're going to hire you and they're going to give you a certain amount of money. This is your salary. This is how many hours you're going to work every day, and that's what's going to happen. Okay. So that's how, with that letter, you can qualify for a home, as long as you have the commitment from the company that is going to hire you. Okay, but you cannot buy a home having an income from California, thinking that, hey, I'm going to move here because I'm making money now, but then you have to quit it and move here. Then you don't have that income anymore, so they can't qualify for that home. Anyway. Jess says, Jack, any thoughts on actively managing real estate investment, for example, flipping versus passive real estate like REITs, index funds? Here's the thing. REITs are great, but it's nothing different than any other stock. It just gives you a little bit more dividends. It's a dividend stock, a REIT. But you don't actually own any assets. So you don't benefit from a lot of things that REIT companies do, such as appreciation, or, well, you do benefit in the stock price, I guess, but you don't benefit from the tax deductions and because, for example, investing in real estate, one of the main things just is that you're saving money on taxes every month. You're saving money. All the income that you make, the cash flow, most likely is going to be offset by the depreciation of the home that you can take as a tax write-off. In fact, for those those people that are making $300,000-$400,000 a year, it's a must to invest into real estate, because you don't have to pay income taxes. Well, you do have to pay income taxes, but you can offset that with the tax deductions that you're getting from investing into real estate. So that's something you have to consider compared to REITs. And REITs, another thing that I don't like about REITs is the fact that you're not managing anything. So you don't have control over any assets that you're managing. And you're not getting all the benefits of that. You're not leveraging your money. You're not putting in, 5% down to buy a home and benefiting with all the leverage that you're getting from the value of the house, from the appreciation that you're getting because you leverage your money. So yes, REITs are okay, but they're nothing different than stocks. Just it's more like it's just a way to invest money, but it's not as lucrative as real estate when you do it yourself, in my opinion. Let me know down in the comments what you guys think about that. That was a great question. Joe, what's up, Joe? We're about to, he says, Jack, I appreciate your help in buying my home in Vegas. I know, I'm super excited. We have the walkthrough on the 7th. We're about to close your house. Amazing home with pool here in Las Vegas. Yeah, any other questions, guys? Let me know down in the comments. We are 28 minutes in. Thank you so much for watching all of this, because I am about to close it up and go on to what's next in my day. So send a few questions if you still have any questions, and then we're gonna call it a day. But yeah, thank you so much for those of you who tuned in to watch this video. Let's see if I missed something over here. All right, real estate. Yeah, the burst strategy. And yeah, I mean, if you're investing in real estate the reasons why there's many factors about investing in real estate. Okay, so number one is leverage. That's the most important thing, because you're leveraging the bank's money to buy an asset that is going to appreciate with inflation, right? The next thing that you're benefiting from when you're buying real estate is tax deductions. That's huge, huge. In fact, my income this year went up a lot, and I need to make sure that I pay off. I buy some real estate, and I do plan on buying at least 2 properties to try to offset that tax amount, because I don't want to pay Uncle Sam too much money, and I hope the IRS doesn't enter the chat. But yeah, I don't want to pay them. But this is all legal, by the way, guys. This is all legal. If you buy real estate, you can deduct that real estate because you have depreciation coming in every month. Let's say you buy a fixer-upper. Let's say you make, I don't know, I'm just going to say a number, $300,000 a year, okay? And you buy an investment property. Let's say it's a fixer-upper. You pay, let's say, $15,000 in closing costs. Then you put in some money to fix it up and rehab it. Let's say you put in 40 grand to rehab it. You're at $55,000 in expenses. Now, there's a rule. If you consider yourself a real estate investor or somebody that is in the real estate field for at least 75%, I think it's like 75 hours a week or so, that makes you a real estate professional. Which, by the way, this is not tax advice. I'm not a financial advisor or anything. Full disclosure, I'm not trying to give you advice on this. However, if you do have if you are a real estate professional, which is if you spend 75 hours a week on it, which could mean, hey, you looking up properties on Zillow, that's time that you're spending for real estate, right? Real estate education. So if you do spend that time, you can depreciate all of those expenses, those upfront expenses, in the first year that you own that house. So for example, if you make $300,000 this year, okay, and let me know if you know, if you think I'm wrong or anything, let me know that in the comments. But let's say you make $300,000 this year and you buy a home, a fixer-upper. You pay $15,000 for your closing costs and expenses and things like that, okay? You rehab it with 40 grand. You're in at 55 grand. Now that 55 grand, it's tax deductible. That's amazing. Think about it. If you're making 300,000 minus 55,000, now your income on which you're going to be taxed is going to be $245,000 and not $300,000. Think how much of a deduction that is on your taxes. Now, I think about it this way: if you are in that bracket of how much money you're making, 300,000. Then you're probably paying here in Las Vegas, because we don't have state income taxes, probably a federal tax of about 35%. Let me know what you guys think. But 35% of $55,000, that's a lot of money. That's about $20,000 that you're saving. Instead of giving it to Uncle Sam, you're keeping it in your pocket. So that's another advantage of real estate, that you can take tax deductions off that can offset your regular income. And that's the problem, because a lot of people think, oh, I can get rich, I can make a lot of money, but then out of all that money, you're gonna have to pay Uncle Sam. And if you don't invest it into real estate, you're gonna be in a really bad situation in the future, because you're just giving money away like that rather than reinvesting it into real estate. Another reason for real estate is appreciation. I mean, appreciation you're going to get over time. Let's say it was 3-4% over time on average. If you have, let's say, $5 million invested in real estate and homes, 5%, let's say, because in the past 20 years it's been probably like 7 or 8%, but I'm just going to go conservative. Let's say it's 5% that you're going to make per year. Then per year on $5 million, what is 5% of $5 million? $250,000? I think so. Yeah, $250,000 a year that you're making in appreciation from real estate. So that's another way to make more money. And if you believe that, hey, home prices are going to drop, then okay, that makes sense. Then don't buy real estate, right? And don't invest in real estate, invest into something else that you think is going to go up. But that's your personal preference, right? But if you think that overall, in the long term, real estate prices are going to go up, and you just have to hold and wait and make money, then great. Appreciation is another way to consider that income. So we said, just to recap, we said, first of all, leveraging. Real estate is good because you're leveraging your income, your investment by leveraging the bank's money. Tax deductions, and we talked about that. And then we talked about appreciation. Also, we have an asset that is producing income every month because it is, you can rent out the real estate and you can make cash flow every month. If you were to reinvest your money that you make from the rent, the difference between the rent and your expenses, which is your mortgage, back into the home, into the mortgage, you can pay off that mortgage probably in 10, 15 years, depending on how good of a deal you got. So that's something to consider as well, because technically, if you buy the right homes that you're investing in at the right time and for the right price, eventually in the long term, I mean, you can pay them off in 10, 15 years. You can retire in 10, 15 years if you get enough homes to do that. So that's something else you have to consider. There's other, let's see, what else? We said tax deductions, appreciation. We said, what's it called? Leveraging more money. And then we have mortgage pay down. I mean, that's another form of income that you're getting every month, because by having a mortgage, having the renter pay for your mortgage, you're getting every month, it's like a forced saving that you can't take out unless you cash out refinance to buy another property. But the renter is paying down your mortgage, and let's say on a $1,500 mortgage, let's say 600 of that is principal that you're paying. You're saving $600 a month, and overall with time it's going to make even more. But here's another chart that I want to show you really quick. So let me share my screen with you guys. The average rent price, the historic median monthly rents in the United States, okay, just to show you what happened over time. So let's say you bought a house in 2005, right, which was the peak. The average rent was $700 for you, approximately $700. By now, the same house would rent for $1,100. That is $400 more per month that comes in. Now, $400 per month extra that goes in and goes towards your mortgage, you can pay off that mortgage way faster. Even if you kept it throughout the recession, the rent prices would have kept going up no matter what. Because look, if you look at it, it's literally a straight line from 1940 going up. This is a straight line for average rents, which is incredible if you consider all the recessions, the housing recession that we had in 2006. Look, rents kept going up, straight up. It's crazy, right? That's because rents, they don't go at the same pace as home appreciation, and it's pretty much how much people can afford to rent it for. That's what they're influenced by. So that shows me as an investor saying, hey, look, rents have been going up steadily over time. So even if there is a recession, I don't care. I'm just going to invest, keep the property, have the renter keep renting out for me and paying down my mortgage and making money. That is the reason why I love real estate. And that's the reason why I became a real estate agent in the first place. Because I figured, hey, this is a really good place to put my money in. So let me know what you guys think down in the comments. I'm about to close this up. Let's say a few more minutes to answer these questions. So if you have any last minute questions, leave them down below. And let's say, just says again, Jack, have cratering lumber futures prices cause price decreases with builders? No, Jess. I know lumber prices have been going down. Let's see what lumber prices are at. Lumber prices today, let's see, $756. Oh, that's cheap. That's like half what it was last month. I think they went up to $1,600 at some point. Hold on, let me share my screen with you guys. Sorry guys. Let's see, so lumber prices right now are at $756. Okay, where's the charts? I'm waiting for the chart, the year charts. Here it is. Okay, so you see, just like Jess was saying, hey, prices have been going down like crazy. We're at 1,700 was the peak, right? That was back in May 7th is when it was. Now, right now we are at, I mean, this went down to 716 at the bottom, okay? So it hit resistance right here, and it's at 700 right now, the lumber prices, which is great because we're going down back to the prices where they're supposed to be. However, to answer your questions, are home prices going down? They're not. As a matter of fact, they keep going up. because the builders, in order to start selling you the house here, they had to order the materials because they're so backed up. They had to order them back here. So maybe in April or May, they started ordering the, you know, the lumber prices. So I feel like we're starting to get over this bump, and hopefully, which I don't think is going to be the case, hopefully they start slowing down and they say, hey, you know what, we're making good money now, you know, lumber is costing us less. However, we're still charging a lot of money for the homes. Let's just, you know, stop increasing prices. Because you know, if you're buying a home right now, you're probably buying with lumber prices probably right here, like at the end of April or so, because we're about 2 months in advance. So the builders are making a little bit less money technically because of this. Now, it's not just lumber prices though that you have to watch out for. You got to see, you know, steel prices, you know, cement prices, all the kind of materials that you need to purchase a home. I mean, to build a home, which is, you know, nails or I don't know, roof shingles, things like that. They all went up in price, but now they're starting to correct. But lumber started correcting way faster, way before everything else. So lumber is not the only thing that is going to influence your home purchase price. It's also going to be everything else. But here's a question that I have for you guys. Do you think that a builder is going to give you a discount once they start paying less for the materials? After home prices have been going up so much and there's still a lot of demand for homes, do you think they're going to drop the prices? I personally don't think so at all. I think they're going to keep the prices up. If anything, they'll start slowing down the increases every month. Instead of increasing at $20,000 a month, they'll probably increase it like a few grand or $5,000 or so a month, just to keep you know, pace and give the people that purchased already a, you know, kind of like a reason to purchase a home. Because if they stop increasing, they're going to think, well, I can just wait until next month to buy it. Who cares, right? So yeah, great question. No, but they have not decreased the home prices. Builders, actually, they're actually still increasing them a lot. Or is their pricing a one-way ratchet? Yep, it's just a one-way. And relatedly, do you think the market has shifted? Has demand softened from red hot spring market Las Vegas had? I don't think so. We're still in a really you know, seller market, and it's really difficult right now to get a home. Even worse than it was 2 months ago. But you know, things, I think they're starting to change a little bit. We just got a contract today for a home, and you know, I thought it was a really good deal, even under market value. And we got in on the first day right away, but we didn't have a bidding war this time for some reason. But that was just one case, okay? If I'm looking at this, the data, which is what I have to look at to give you, you know, a breakdown of what's happening, then you're probably not going to see any difference. I mean, maybe a little bit of a slowdown is probably just buyers, you know, being exhausted of trying to put in offers and not getting accepted. They're like, whatever, I'm just going to give up. I'm going to go rent and maybe try again next year if things cool down a little bit. Maybe that's what it is. But yeah, we're not seeing anything as far as, you know, prices stabilizing or getting any better. Anyway, I'm going to call it a day, guys. It's been 43 minutes. You know, I appreciate you guys all for being here and tuning in to watch this market update, and also, you know, talking about real estate investing. And I hope you got some value out of this. You know, hit that like button, subscribe to the channel, and feel free to reach out to me for any real estate needs that you have for purchasing a home here in Las Vegas or investing here in Las Vegas. I'll be glad to help you out. Thank you so much, and I'll see you in the next video.